Hello, everyone. Welcome to MSS Mentorship and Online Classes. I am Mohamed Sheikh Sise, your tutor and your mentor. Today, we are going to complete IFRS 15, Revenue from Contract with Customers. And we have already covered the basic principle about IFRS 15, also the 5 stages for revenue recognition according to IFRS 15. Also, we have covered the aspect of recognizing revenue at a specific point in time, as well as how we are going to recognize revenue over a period of time. We have also looked at the condition, the criteria as to whether we are going to recognize revenue at a specific point in time or whether we are going to recognize revenue over a period of time. Also, we have covered the aspect of contract cost, which is very much important for the examination. So today, we are going to look at example. We are going to solve two examples so we can able to understand, to be specific, the contract cost aspect, because we are going to look at how we can recognize revenue over a period of time. To be specific, for a construction contract, for instance, the company had a contract with customer to construct a building for 5 years. We need to know how are we going to recognize the revenue over a period of 5 years, whether we are going to use the input or the output method, or whether we are going to recognize revenue at year one, whether we are going to recognize revenue at year two, or whether we are going to recognize the bulk sum of the contract price of the consideration in a single year. So all of this distinction, you can go through my previous lectures, you can able to understand. So today, I'm going to focus on solving these particular examples so we can able to, to understand. So now we are going to look at example one. The requirement stated that how should the transaction be accounted for in the year ended 31st December 20x1. So this is the requirement. How are we going to recognize this particular transaction as at 31st of December 20x1? On 1st January 20x1, the first year, Becker entered a contract with customer to construct a specialized building for a consideration of $2 million plus a bonus of 0.4 million. So we are going to look at the content of the bonus because under the computation of the contract price, there is a component of variable consideration, a contingent consideration. So if the conditions are met relating to the bonus, then we are going to include the bonus as part of the consideration. But if the conditions or condition is or are not met, then we are not going to, include the 0.4 as part of the consideration. So now let's understand the question. If the building is completed within 18 months, so we are going to receive a bonus of $0.4 million if the construction project is completed within 18 months. Estimated cost to construct the building, we are 1.5 million. Cost to construct the building, 1.5 million. We need to note it down. Also, this is the cost to complete. If the contract is terminated by the customer, Baker can demand payment for the cost incurred to date plus a markup of 30%. So in a case, if the customer decided to breach the contract agreement, if the customer decided to terminate the contract, then the construction company will demand the payment of the cost that they have incurred to date plus a 30% of markup. On 1st January 2021, because of factors out of its control, Becker was not sure whether the bonus will be achieved. Fine. So we need to assess at the end of the year whether the bonus will be achieved or not only at the start. So let's continue the question. At 31st December 2021, Becker had incurred cost of 1 million. This is the cost to date, and was still unsure whether the bonus target would be met as at the 31st, at the end of the financial period in which we are going to prepare our transaction. There is still uncertainty as to whether we are going to achieve the bonus target. So automatically it means we should not include the 0.4 million as part of the calculation of our revenue recognition. Becker measure progress towards completion based on cost. So we are going to use the input approach, the cost to date divided by the total cost to give us the percentage of progress. At 31st December 2021, Becker had received 1 million from the customer. So it means at the end, under the stage 4, we are going to look at whether there's a contract asset or a contract liability. So basically, this is the question. So we are going to solve it now. Right, so let's collect data, very important. So now let's look at the steps. Sorry. Step 1, we are going to determine the overall profit, overall profitability, overall profit. So why it is important for us to determine the overall profit? Because according to IFRS 15, under the contract cost, we need to know 3 important rules. Firstly, if the expected outcome is a profit, then it means we are going to recognize revenue based on the progress of the implementation. First point, if the expected outcome is a profit, we are going to recognize revenue based on the progress. Second point, if the expected outcome from the contract agreement is a loss, then it means we are still going to recognize revenue based on the progress of the contract. Then secondly, we are going to make a provision for onerous contracts. You can look at lecture 3, then you can be able to distinguish it clearly. Also, if you want to understand the concept of onerous contract, you can look at my IES 37 provisions, contingent assets and contingent liability lecture notes. You can be able to understand detail about onerous contracts. So now, when we are going to make the provision, the double entry should be, we should debit the cost of sales and we are going to credit the liability, which is very crystal clear. So basically, if the expected outcome is a loss, this is what we are going to do. So now, if the expected outcome is uncertain, if the expected outcome is not known, if the expected outcome cannot be determined at the initial phase of the project, then according to IFRS 15, it's clearly stated that we need to recognize revenue based on the expected recovery cost. That is the cost we have incurred to date, the cost that will be recovered from the customer due to the implementation. So this is the 3 concepts that you need to know. And this is the major reason why we are going to determine the overall profit, because it will be used to determine how are we going to recognize revenue and how are we going to treat the particular transaction. So now for the overall profitability, it's simple. We need to determine the consideration, the revenue that we are going to receive, which is in this question is $2 million. 2 million. I'm going to do it in thousand. Then the cost, we need to consider the cost to date. The cost to date. On 31st December, I incurred 1 million cost to date, 1,000. Then the cost to complete, which is also given in the question as 1,500. So basically, these are the costs. So we need to deduct it from, sorry, estimated cost to construct. Okay, the 1.5 is total cost to construct plus the cost to date. So now the total cost will be this, then the cost to complete will be 1,500 minus the 1,000, which is 500 that we are going to include. Very good. So now the profit or loss, which in this question is a profit. So the profit is 500. The profit is 500. Very good. So we have calculated the step 1, we have determined the profitability. So step 2, we are going to calculate the progress, the percentage completion. which is the progress. And we can either use the input or output method depending to the question. And this question is clearly stated that we need to use the cost incurred to date. So which means we are going to use the input method. So we are going to use the input method. So the percentage of completion, progress percentage is equals to, since we are going to use the input method, it means cost to date divided by the total cost multiplied by 100. So basically, the answer will be 1000 divided by 1500 multiplied by 100. Let me use my calculator. Calculator. 1000 divided by 1500 will give me 0.66. So it means in percentage is 66.67. So step 3, this is step 2. So step 3, we are going to determine the statement of financial statement of profit and loss. Statement of profit or loss. So now we are going to recognize revenue. It's very simple. We are doing it for a single year from the 1st of January to the 31st of December 2021. So this is the first year we are going to recognize the revenue. And since the overall expectation is a profitability, so it means we are going to recognize revenue based on the progress so far. So revenue will be recognized based on the progress, 66.67% multiplied by the expected revenue, the 2000. So 0.66 so 0.6667 to 40p multiplied by 2000. So it's to the nearest it's 1333. Then the cost to date will equals to, from the question, is 1000. Then um therefore this is the profit equals to 333. Simple. Step 4, we are going to determine the component of the statement of financial position. Step 4. Step 4. Statement of financial position. So basically, under the step 4, we are going to determine whether there's a contract asset or a contract liability. So we are going to compare the revenue recognized to date as of that of the actual invoice, the cash that's received from the customer. So we're going to look at the revenue recognized to date, which is from the above, is 1333. Then the cost, or sorry, the cash received from the question is 1000. So therefore, if I've already covered the concept of contract assets and contract liability in lecture 3, so you can review it, so you can able to understand. But so short, if the revenue recognized is more than the cash that we received, it means we are going to recognize the contract asset. Why it is an asset? Because it is a property, that is controlled by an entity. You can look at the conceptual framework as well, so you can able to understand. So basically, the revenue we recognize is 133, and the cash actually received is 1000. So we are going to get a contract asset. of 333. So basically, for this particular example, this is the solution. So when we are going to look at our live online class, if you have any question, then you can ask. So now we are going to look at example 2, which is a little bit technical. However, we need to go through it so we can able to understand, right? The requirement stated that on how the transaction should be accounted for in the year ended 31st December 2021. On 1st January 2021, Castrol entered a contract with customer to construct a specialized building for a consideration of $10 million. Castrol is not able to use the building themselves at any point during the construction. It's fine. At 31st December, at the end of the year, Castrol had incurred cost of 6 million, the cost to date. The cost to complete are estimated at 6 million. So the cost incurred to date and the cost to complete is 6 million. Castrol measure progress towards completion based on the cost incurred. So the input method also is used. At 31st December 2021, Castrol had received 3 million from customer. So we are going to determine whether it's a contract asset or a contract liability. So now, the question stated how we should recognize the transaction, how we should account for the transaction. So we are going to use the 5 stages as well. The first stage, we need to determine step 1, whether the overall status, we need to determine whether it's a profit or a loss. So now we are going to look at the consideration, the revenue. The revenue is 10. I'm going to do it in 1,000 as well. Then the cost to date is given in the question, minus 6,000. And the cost to complete is also given 6,000. So therefore, this is a loss-making project. So if it is a loss-making project of minus 2,000, then if it's a loss-making project, it means according to IFRS 15, we need to recognize revenue based on the progress, as well as we need to make provision for onerous contract. So step 1. Step 2, we are going to calculate the progress percentage. So now the percentage is equals to, we are going to use the input method, the cost incurred to date, the 6,000, divided by the total cost, which is 12,000, multiplied by 100. So it implied it 50%. Very good. Step 3, we are going to determine the statement of profit or loss. Very simple. So now we are going to recognize revenue based on the progress, revenue based on progress. So the progress is 50%. So revenue will be recognized. The consideration is 10,000 multiplied by 50% will give us 5,000. The cost incurred to date, cost to date is 6,000. Cost to date is 6,000. Then also, according to IFRS 15, when the expected outcome is a loss, then it means we need to make a provision for onerous contracts. We are going to recognize the provision based on the percentage of progress as well. So we need to note it down. So now we are going to include another cost, which is the provision. Very simple. The provision. In bracket, going to make the provision. So now the expected loss is 2,000 multiplied by 50%. So this is the amount that we are going to debit in the cost of sales, and we are going to credit as liability. Cost of sales. Let me state it clear. Sorry. Cost of sales. So now 2 minus 1,000. So now there's a loss of 5,700. There's a loss of 2,000 as well. Very clear. So now, what we need to do is step 4. Very clear. Step 4, we are going to consider the statement of financial position. So we are going to determine whether it's a contract asset or a contract liability, which is clear. So we're going to look at the revenue recognized to date, which is 5,000. Then we're going to look at the cash received, which is 3,000. So it means this is a contract asset, contract asset. There's a contract asset of 2,000. Very clear. Also, we need to know we have recognized a onerous contract, a provision of 1,000. So there is a still outstanding provision of 1,000. So now what we are going to do, we need to credit liability amount of 1,000. Very simple. So basically, this is the concept of IFRS 15. And what you need to know as a student, you need to know each of the stages and the contract costing, the 4 stages that we are going to use to calculate the computation, whether it's a profitability, whether we are going to calculate the percentage of progress, whether we are going to calculate the revenue that we are going to recognize, the cost to date, whether we are going to calculate the provision, whichever step. Why it is important for you to know, because especially for financial reporting students, for F7 students, in the objective test question, you will be asked to calculate any of the components. You will be asked to calculate the contract asset and the contract liability. You will be asked to calculate the revenue that should be recognized based on the progress. You will be asked to calculate the percentage of progress using either the input or the output method. Then you will be asked to determine the overall status of the business. So for you to be on the better stage, you need to understand each of the various stages under the contract costing. Very important, very key concept that you need to know as a student. So now we are going to browse. We have completed this session. So we are going to browse through the objective test questions. When we are going to look at the live online session, we are going to solve these questions. But basically, look at the question. R has prepared first the requirements. Which of these has been correctly included in revenue according to IFRS 15, revenue from contract with customers? R has prepared its draft financial statement for the year ended 30th September 2024. It has included the following transaction in revenue at the amount stated below. A. The question stated, which of these has been correctly included? Agent sales of $250,000, on which Repo is entitled to a commission of 10%. Then we are going to look, we have already covered that aspect as to whether we are going to recognize based on commission or based on the 250,000. The sales proceeds of 20,000 for motor vehicle, which we are no longer required by Repo. Fine. Very critical. The sales proceed. We are not selling car. Anyway, we are going to solve it when we are going to look at the live online session. So I'm doing this to encourage everyone to take part in the live online session so everyone can benefit. The sales of, anyway, let's go to example 2. Which amount will be reported as a contract asset, as I mentioned earlier? The question stated about contract assets. So for you to recognize the contract asset, you need to recognize revenue to date, and also you need to look at the cash that is received. Then if the revenue to date is greater than the cash, then we are going to recognize the contract asset. Alternatively, we are going to recognize the contract liability. Also, according to IFRS, for question 3, according to IFRS 15, revenue from contract with customer, how much should L record in the revenue for the year ended? This is step 1. Sorry, step 3, the amount that we are going to recognize as revenue. Very clear. Look at the question. Very simple and very straightforward. So we need to look at it as well. Question 4, place the following steps for recognizing revenue in order in accordance with IFRS 15. The steps, very simple. Identify contract, performance obligation. You need to look at transaction price, look at this, and that. Final step, we need to recognize revenue. Question 5, we need to calculate how much revenue and cost of sales should be recognized. So as I mentioned earlier, you need to know each of these stages on the revenue recognition, the first 5 stages, as well as you need to know the 4 stages under the contract cost. So wish you all the best, and our next session will be IFRS 16. We are going to look at leases, very important concept again for us. So thank you very much for your wonderful time.